So there are a ton of topics to cover in regards to Tesla stock, but before we go ahead and talk about some of the more concerning topics, I want us to really just start off this video more on a positive note and talk about some of the positive data points. With the first positive data point being that now we officially have a verified Tesla affiliated page for the Cybertruck. Now, before some of you guys say, hey, but it says joined in July of 2023. Yes, this account was made earlier in the year. However, on October 6th, towards the end of the night, this is when we actually saw that it had that verified badge and is now affiliated with Tesla. Now, while this may come off as entirely meaningless, this is an interesting alternative indicator for when the Cybertrucks may be rolling out, because now we see that Tesla has an official page on X.com for the Cybertrucks, and so that means the Cybertrucks may be rolling right around the corner for its deliveries, and that's going to be a huge positive catalyst for Tesla stock. In addition to that, we also got a positive update from Sawyer Merritt saying that Tesla plans to launch its own cell recycling pilot plant to achieve metal recovery on its own, and it will be located at Giga, Nevada, according to recent job postings. Now, since we're sharing a lot of news from X.com, I also want to share this tweet that I recently found from Gary Black, who's a fund manager and also a Tesla bull, voicing out his concerns and views on Tesla. He recently tweeted saying, despite Tesla's year-to-date price cuts, Wall Street consensus Tesla deliveries for fiscal year 2023 and fiscal year 2024 have actually declined since average selling price and auto gross margins were reduced at the beginning of the year. Uber bulls argue that rising interest rates have caused the decline, but if that were true, why is the US auto industry SAAR up 15% year over year with the same interest rate increases? This suggests that price elasticity of demand for Teslas, which are luxury goods, is essentially zero, and Tesla management should find other marketing levers besides price to accelerate the world's transition to sustainable energy. Now, essentially what Gary Black is saying here is that Tesla cutting prices on its models isn't necessarily stirring up demand in this high interest environment like what many Tesla bulls have been saying, and in fact is kind of alluding to the idea that Tesla has to look at another avenue to stir up demand, kind of hinting to the idea of more advertising. Now, I don't disagree with that idea of advertising, but I kind of disagree with what he's saying. So here's the thing. As far as advertising, I definitely believe that Tesla can be doing more to advertise its vehicles. I think there's a huge consumer base who are completely unaware of all of the specs and features that Tesla offers. And so I don't disagree with the idea of actually advertising. But as far as pricing power goes, I think that this still helps Tesla, especially in this high interest rate environment, simply because, yeah, it's hard to finance a vehicle right now when interest rates are at 8%. And yes, all the other automakers are still having demand, and it's probably because of what they're doing with advertising, and this is something Tesla isn't doing, but I don't think it necessarily hurts Tesla too bad, especially because it has this sort of pricing power impact where a lot of these legacy automakers are having to cut down their prices as well to compete with Tesla, and this is hurting the legacy automakers because they are not profitable on their EV products yet, and so they're trying to scale up to even get to Tesla's level. But with Tesla being able to have this pricing power, being able to cut its models, well, it hurts the legacy automakers actually get closer to ramping up to actually competing with Tesla. So I don't think it's terrible. I just think that too many more price cuts from here on should not be happening. But at the end of the day, I don't think it's a terrible idea for these price cuts. Now, I want you guys to take a look at this chart over here because I found it very interesting, and I find that this actually relates to what I'm going to talk about going next in regards to Tesla. See, on this channel, I talk a lot about looking at several data points. I say you just can't look at the charts. You can't only focus on the fundamentals. You have to look at the charts, the fundamentals, the macroeconomic data points, as well as catalyst events. And so this falls into just the macroeconomic data points, this portion of what I typically talk about. See, this chart depicts trucking employment falling off a cliff and kind of highlighting that every time trucking employment falls down, we tend to enter into a recession, and currently we're seeing trucking fall off a cliff, as the title of the graph implies. Now, this ties into what I've been saying here on the channel for a while, that although many central bankers and other politicians have been pretty much projecting this idea or stating this idea of a soft landing, economically, things don't look too well. Now, the reason why it's important to pay attention to trucking employment is you can see it's typically like a leading indicator for recessions on this graph, is because trucking is closely linked to the health of the supply chain, which includes manufacturing, wholesale, retail sectors. And so essentially a drop in trucking employment might signify reduced demand for transporting goods, which can mean reduced production and reduced consumer demand. This chart over here depicts the delinquency rate on credit card loans from banks that are not among the 100 of the largest in size by assets is rising to a level that we have never seen. And again, this is in sync with what I've been saying, that economically things aren't too well off. And in the previous video, or in a few previous videos, I talked about how we may see a little bit of a relief in the overall markets, and we'll talk about that later on in this video. But I said that it is not likely to be a sustained relief, because when you see that many of these banks are seeing more delinquencies in their credit cards, you're also seeing more bankruptcies take place. We're also seeing the leading economic indicator collapse for the 17th month in a row. I mean, there's several different indicators out there pointing that this isn't necessarily the greatest economy. And so this means that we're going to see more weakness for the consumers, and this is going to bleed into corporate profits. Now, we have this clip over here just showing that there's pretty much more conflict taking place in the Middle East at the same time where we're already currently having conflict with Russia and Ukraine. Now, I don't want to go too deep into the specifics of the conflicts in the Middle East right now, simply because on this platform, if you say certain things, you do risk yourself kind of being stifled from, or really just censored. And so I don't want to talk about anything like that in this channel, but being that this is a finance channel, we talk about stocks and Tesla stock very often, this is something that could pretty much spook the markets as we go into this week. Because again, as I've said, one of the main concerns is already what's happening with Russia and Ukraine. And so adding another conflict and just geopolitical tension taking place is not necessarily a good thing.
This is bad.
But with that said, I want us to go ahead and hop into my laptop. This way we could take a look at Tesla from a deeper perspective and really look at it from a technical approach as well, and talk about some other factors that we should absolutely be aware of as we enter into this week for the markets. But before we hop into my laptop, make sure to take a look into the comment section of this video below, because there is going to be a pinned comment for my free weekly market pulse insights, where every single Sunday I send out an email talking about what's going on with the markets that every market participant should absolutely be aware of. And again, it's completely free, so definitely check out that link in the pinned comment section below. And let's go ahead and hop into my laptop. Alrighty, so we are officially in my laptop taking a look at Tesla stock. And what we're currently seeing is that so far for October, we've been pushing upwards. Now, this is actually in sync with what I've been telling the Push and Profit private group about how the markets tend to have this seasonal aspect to them, where we see things kind of happen in certain parts of the year. For example, back in August, I told the Push and Profit private group that August tends to be a month with lower trading volume, and this is simply because we see a lot of fund managers in Europe take holiday, right? A lot of the Europeans definitely take more days off than we do in America. And then I mentioned how September is a historical bad month for the markets and how we see a lot of selling pressure. And I talked about some of the reasons why we see that. We see repositioning taking place, and we see a lot of the mutual funds end their fiscal year. And so, we ended up seeing, once again, September be a bad month. Now, does this mean that September always is going to be red? No, absolutely not. But that's what we historically see. In fact, if we go back, you'll see that September just for the last few years has been pretty bad for the markets. Now, we're seeing October push upwards, and October is where we start to see a little bit of a bottoming out in the markets. However, I've said that this doesn't mean that this October we're going to push upwards and then we're going to go into all-time highs. I said that it's most likely a relief rally that we're going to see. In fact, if we go back to last October, we could see similar patterns taking place. We saw last year in September, a lot of selling took place. And guess what we saw for October? We saw things kind of push upwards, but that does not mean that just because we push up in October, we're going to end the whole rest of the year going into the green. Now, one of the things I've also mentioned is that we're kind of transitioning from one of the data points that I've been hammering on for a while. I've been talking about the 10-year treasuries for a while now and how high yields on the 10-year is bad for the stock market. It's kind of this risk premium or equity risk premium situation taking place where when the 10-year treasury is high with the yields, it kind of takes away the appetite to invest in stocks. And so that's something that we've been talking about for a while, and we've seen it actually unfold and take place. But now we're actually transitioning to a space where the data is going to shift on something else in the spotlight, and that's going to be earnings season. And we'll talk about that in a moment. But before we do so, on top of earnings season being a big aspect for the direction for the markets going into this last quarter, one of the things we also want to pay attention to is next week we have the CPI come out, and this is going to be a huge economic report that we're going to want to pay attention to because, as I've said last week, something that was going to be shifting the markets was the labor data, and we've seen, I mean, you guys could see my previous videos. I don't delete my videos on YouTube. I think it's important to say something on record and have it up there, but we've seen so many times how economic reports, have a huge influence on the markets. For example, last trading session, we saw when the report came out how we had a hot labor market. We saw Tesla stock fall down as well as the overall S&P 500. However, when you parse through the labor data, we actually saw that wage growth was slowing down, and that's actually good for the idea of inflation. You could actually add more jobs, but as long as wage growth is kind of stifling, well, that means that the pressure for the Federal Reserve isn't too bad. But one thing we have to remember is that, okay, we went through the wave of labor data. What comes next before we have an update from the Federal Reserve and on their decision with monetary policy? Well, of course, that's going to be the producer price index, which most people don't really pay attention to, but you absolutely should pay attention to it as it's a leading indicator for inflation. But also the CPI report, which is a gauge on inflation. It's an inflationary gauge, and more importantly, we're going to want to pay attention to the CPI, the core CPI, right? Because we know that the regular headline CPI, headline inflation, has been going upwards because of energy, and that's definitely something you want to consider. But also, we want to see if core inflation actually starts trickling down and continues to go down, because then that would signify that, hey, maybe the Feds don't have to hike. And so what we're currently seeing with the future markets is that they're actually starting to worry a bit that the Feds may hike. In fact, this has recently gone up, right? We're seeing that now the future markets are predicting or pricing in a 27.1% that the Feds are going to hike into this range as far as monetary policy, while still having a 72.9% chance that they're going to just pause on rates and just keep them at where they're at. Now, we're going to want to monitor this because if we have a hot CPI report, if we see inflation trickle upwards, well, best believe we're going to be seeing the future markets start panicking and worrying that the Federal Reserve may actually have to hike. And so that's going to be a huge report coming out next week. And so if we actually see that cool off, we could see some more of a push up for the markets as well as for Tesla stock. Tesla stock isn't just something that moves alone, right? It moves oftentimes with these economic reports. And so that's why I try to heavily talk about this with the Push and Profit private group, but also on YouTube. Now, something else that we want to be aware of, as I mentioned earlier in this video, we talked about the conflicts going on in the Middle East. I didn't dive too deep into it, but that could cause a little bit of a panic for the markets before we actually get the report on October 12th. So be aware of that. We may see, things kind of dip down a bit. Of course, we're going to have to stay data dependent and see what actually takes place as we're getting new news unfolding almost every other hour about what's currently going on. But yeah, that's going to be something we're going to want to pay attention to. And most importantly, of course, as we head into the end of October, that's when we have the November 1st monetary policy decision from the Federal Reserve, right? Now, before we actually get into that, what else do we get that's a huge, exciting thing for Tesla, or it's going to move Tesla a huge amount? Well, that's going to be the earnings report that we get on the 18th. Now, we are starting the wave of earnings. As I said, we're kind of leaving the idea of focusing really hard on the 10-year treasury and kind of going to want to focus on the wave of pretty much these earnings reports coming out. We typically have the banks start things off. We're going to have them start things off on Friday the 13th, which is pretty funny. But we're actually having a few companies actually report before then, as you can see, Delta, Domino's, a few other companies that you may recognize. But what we're going to want to pay attention to for Tesla, of course, is going to be Tesla's earnings report, which comes out on the 18th next, or 2 Wednesdays from now. And one of the things we want to be aware of is we know that, of course, deliveries were warned by Elon Musk in the previous earnings quarter, saying that, hey, factories had to get upgraded. This is going to stifle production, and that's why we saw a lot of selling pressure after the last earnings. In fact, one of the things I mentioned on this channel is that there's a lot of nuance in regards to these earnings. It's not just about did you beat earnings. I mean, you have to listen to the earnings guidance, the forward guidance, and so that's something we're going to want to listen to, whether Elon Musk is going to be on the call talking, or I believe he will, being that the previous CFO resigned, so most likely we're going to hear Elon Musk talk. Which is funny because I believe last year or the year before he mentioned that he wasn't going to be on these earnings calls unless there was something important to say. But it looks like every quarter he's on these earnings calls again. But again, there's a lot of nuance to these earnings because it's not just about beating earnings, especially if earnings have been revised downwards. It doesn't mean much if earnings revise down but you beat them. Now, what's a little bit concerning about going into this next earnings season is that a lot of these earnings have actually been revised upwards. And so that could set the market for disappointment, meaning if we don't see a lot of these companies beat their estimates that were revised upwards, well, that could serve as a catalyst for things to fall down. And so we have a lot to pay attention to, and this is going to be a huge volatile end of the year. We're going to want to absolutely pay attention to things. I said, more importantly, is specifically to the Push and Profit private group, this is where we're going to want to move more cautiously and be a little bit more selective about the names that we're paying attention to, as I believe we're going to start seeing some more misses from a lot of these companies as economically things don't sound very well. Of course, I'll keep you guys updated. By the way, if you're new to the channel, consider subscribing so that you don't miss out on any future videos. But let's go ahead and look at Tesla stock now, just like from a technical standpoint, right? So right now with Tesla, we're at this area where there's a lot of volume relative to price, and that means that there's a lot of exchanging between buyers and sellers at this specific price point, and that could cause consolidation, areas of supports and resistances. And so if we just have a little bit more optimism, such as the Cybertruck's deliveries being announced, well, that could push us up into this range where there's less volume relative to price. But a concern is that when we look at this descending trend line, it's been something that's been very prominently holding Tesla downwards. And so I don't actually expect Tesla to break out of this trend. If it does, then I'll be very excited, as I will most likely deploy more capital to my long-term portfolio for Tesla, because of course I like to buy things on a discount. I like to buy Tesla when it falls down and wait for that confirmation of an uptrend. But if Tesla breaks out of here, or when it breaks out of here is the better way to phrase that, then that signifies that we're in a new uptrend. And so I'll definitely be glad to deploy more capital, but I don't necessarily think that that is going to be the case. I believe that we still have more pain, as I've said multitudes of different times on this channel and to the Push and Profit private group, that realistically we're not in a great environment. And so yeah, we could have some earnings do well, but I don't think it's going to be enough to push us upwards. If we take a look at the SPX, which is the S&P 500 index or actually it's just the S&P 500 index, we see that we're kind of bouncing off of this support around this 4,200. And so again, kind of showing that October is being that month where we're seeing this push upwards. And so we're going to want to pay attention to this level over here. Because if we continue to push upwards, well, that could signify, hey, things are looking good for the overall market as well. But again, I don't think it's something that's going to last very long. But you guys let me know in the comment section below, what are your thoughts in regards to Tesla in the short term and also in the long term? As I often say, I invest for Tesla in the long term. I'm a long-term player for Tesla, but I also trade Tesla in a separate trading account where I pretty much trade the fluctuation of prices with certain stocks like Tesla to hedge my long-term portfolio. And so if Tesla does get rejected here once again, I'll do the same thing that I did over here, the same thing I did over here. Over here was like the best time when I shorted Tesla. I mean, this was honestly, I killed it over here. But just as I did all the times that Tesla rallied up close to this trend line and it got rejected, I shorted Tesla to hedge. And so if that happens once again, well, I'll be gladly open to hedging my long-term portfolio by shorting Tesla. But we'll have to see. There's definitely a lot more to unfold, and I'll keep you guys updated. But before you guys go, make sure to watch this next video right over here, kind of breaking down why I don't trade penny stocks. But if you already saw that video, make sure to watch this next video right over here, and I'll see you guys on those next videos. Take care, guys.